So most AI investors are fighting over the chips. The real winners are actually not the chips, they are the real estate plays. GPUs are going to be great in the next year or two, but the public seems to be distracted by this idea that it's all semiconductors, whereas there's companies that are providing the actual power and getting the building constructed. And so you might be missing the 2026 AI cycle. If you don't know this one, APLD is what we're going to jump into today. Speaking of AI usage, we have been using the Prophecy app. We've seen some record-breaking numbers on the usage from our users. So if you want to get the top AI stocks in the world, along with the best AIs to analyze those stocks, Prophecy is officially closing tonight for the holiday sale. So this is your last chance to get the top models, including Grok, Gemini, GPT Pro, Claude, and start investing to get projections before it's gone. So again, the first link in the description. So we're in the middle of an infrastructure shift right now as AI companies are in bottleneck because they need more power and more data centers. And if you're not watching APLD, you could be missing out on some of the super factories that are being built in this AI era. So let's jump into it. So when it comes to their earnings, they got them coming up on January 7th, and the company has seen a lot of growth over the last year. But not only have they grown from $3 a share to $40 a share, and now they're kind of pulling back down. You see them back down to the support, potentially making a recovery. We're watching a recovery up to about $28. That's a 20% recovery. If they get to previous highs, we're looking at about 65% increase potential. But with their earnings coming up, it's a big time to watch APLD. What people don't realize about the company is how much they have recently been constructing data centers. You got the traditional data centers where they're air cooled and the energy is not as renewable and the scalability is not as good. And probably they're not built in the best place strategically to handle all of the energy usage. Maybe it's really hot in the summer. It's more expensive for the power. Whereas APLD, they focus on the cooling technology, liquid cooling. They focus on the renewable sources like the wind and the solar and the hydroelectric. And then they also are building their data centers in very cold places like North Dakota, where it's cheaper to run your data center because it doesn't require so much energy in the winter. And so when you look at data center solutions, what they're offering, again, they work with building these AI data centers for NVIDIA. They have an investment from NVIDIA, Dell, Intel, Hewlett Packard. They're partnered with Supermicro Computer. And they recently signed some very large deals. Now, there's one deal that's potentially in the pipeline. This is where we get into maybe some speculation, is that they could be signing potentially a Microsoft deal or something of that sort. I've heard a lot of news or rumors about it, but we don't have that confirmation, which could put the stock into big gains. Currently, the deals that they have are with CoreWeave and some other AI hyperscalers with just a little bit over $15 billion in construction and leases for these AI factories. And so they've had, you can see some finalizations of the factories here. There's a 15-year lease there. They're working with, again, CoreWeave and others, including the AI factories. Here's another one. They're working in the cloud business to purpose-built to support AI native demand for GPU accelerated cloud infrastructure. And they also are working in the markets of the actual construction of the companies. And they also acquired a company related to the actual configuration or software a little bit ago, which I don't see here. But nevertheless, they got about $15 billion in contract pipeline. And then you can see that while most of the targets are up into $50, there's a $55, $60 or $80. They're currently valued at just $24. Now, again, they were at $3 around this time last year. We've seen them recover big time. And they're also, just in the last few months, they were up to way higher than that, around $40 a share. So they have corrected down drastically despite being up 140% over the last 6 months and about 220% from the start of the year. So while they're up, 2x at this point, there is potential for them to get up into that $50 price range. Now that would be another 2x or 100% increase, right? And so with their current levels, their market cap's at 6.8 billion. So this is where you look at the financials. I was looking at every earnings call that came out, and every earnings call from Microsoft, Google, Apple, Tesla, they're all investing more. And in fact, you see Applied Digital being one of the companies that's helping those companies invest more in the construction of data centers. And so they're at 6.8 billion right now. Some of their other competitors would be considered like Iren or potentially Enbis, which they have some other deals that they've been signing. They just signed a $9.7 billion deal. That company's at $10 billion in market cap, which is pretty much about $4 billion more than Applied Digital. And Applied Digital doesn't have the positive net income. But if they convert all this big pipeline that we're seeing into real revenue, it shows up on the balance sheet or shows up on the income statement next week or when we get into that earnings call on the 7th, then we could see them surge tremendously. Right now, they're at 2.4 billion in assets, which means that they're positioned in reality to, if they continue to see results from their deals they signed and those show up on the income statement, they could potentially be, a 10 to $20 billion stock, which if they get up to 12, 13 billion, they are now 2x from here. So that's why we're watching them so closely. Now, of course, if they don't come in with the income and the earnings are disappointing, we're going to say, hey, what's going on? Why is it taking so long? We signed these $15 billion deals. What's the accumulatively? What's the reason for that, right? But when you look at the projections, and by the way, in StockMate, I see us focusing on the earnings. There's a lot of great news on APLD. We've been talking about it here. If you guys ever want to talk about some of the data center stocks, quantum AI stocks, there's just under 30 millionaires there. There's also people that are beginners as well. But if you want to talk with them and also be able to talk with me one-on-one, it's going to be the second link in the description below for StockMate. And we have our daily live trading. You get access Monday through Friday again there below with a free t-shirt included. So it's a pretty great deal. Lifetime access for the holiday season. So go grab it while it's there. In the event that APLD comes out with bad earnings, you're probably looking at what could be a correction back below that $22 range and selling back down into previous resistance level here around that $15 to $20 range. There's a support there around 20. But if they come in with anything that's okay on earnings, you're probably looking at a recovery back up into this $29, $30 range or consolidation up into these levels around $25. So they're currently holding a support right here around $23.50 with the next target bullish up to 28. That would be a 21% increase. And the longer term bullish target up to about $39 a share. So $39 a share would be about 65, 70%. That's what we're watching with APLD. So when we look at the projections, I was just looking at the projections from Prophecy, and I was getting the next month looks very bullish. They're anticipating 6.4% gains according to Grok. According to OpenAI, we can also get that analysis here. Looks like about 5.8% bullish over the next month. Looking at that $25 resistance that they're approaching right now, but anticipating a breakout. And you can see that support level at 2365, not 2350, but 2365 that I was just pointing out a moment ago. That's what OpenAI is watching out for. So in the next day or so, maybe in the next hour, you do see a little bit of corrections towards the end of the day, as they've had a green day today. But into the next month, into the next 3 months, or further into the next year, looks quite bullish, up into that $28, $30 range, according to OpenAI. When we look at Claude, we can get some analysis as well. One thing to note here on this transaction with EKSO, EKSO. It was a recent development surrounding APLD here, with the market cap from EXO currently at 1 billion. You can see EXO transaction is expected to streamline operations, potentially saving the company 10 million annually, which could impact profitability positively. Increased demand for AI solutions is projected to drive APLD's revenue significantly. So that's kind of what we're talking about, what would be driving them here. APLD favorably positioned, and they're anticipated to be much more bullish over the next year. And they're acquiring or working with this company, EKSO. So when it comes to the next year, according to Claude, it's much more bullish, actually, 25%. Wow, when you compare Claude with OpenAI over the next year, it's like almost night and day. Let's see, the next year, 18% according to OpenAI, and then according to Claude, the next year is not 18% but 25%. Very bullish. On those time frames, if we get the AI analysis, let's see what it has to say. The next day is the most confident, anticipating a jump above the $25 range into New Year's, or I guess you could say next market open day. So when the market opens on Monday, and a little bit of a maybe correction potential in the next month, maybe due to earnings volatility. But longer term, you get into the 3 months, 6 months, things look very bullish. In fact, so bullish over the next 6 months, it's actually up to $34 a share according to Claude. So, results very, it's not anything that I would say is like concrete, but that's what Claude says, and this is based on how I invest. So the technical analysis, fundamental analysis, the news, the financials, the SEC data, all that stuff given to the AI models, along with quantum if we're using it. And that's what it says. This is the will, I guess, estimate analysis, you could say, based on how I do analysis when, giving that process and system to, in this case, we're using Claude. Okay, so, it's really interesting. It looks fairly bullish into the next few months and into the next year. So we're going to continue to cover the data center market, as it's just a really dynamic market right now. And so we'll continue to see also the short term, if any trades present themselves. Maybe we get that bounce around that $23.50 up into that $28 range. That's still enough to, outside of our long-term positions, maybe if that's a 20% swing on APLD, it's a 40% swing over on APLX. So we could watch there, see how they're reacting to this next week, and potentially we'll be making a trade if that opportunity seems like it presents itself. If you'd like to tune in to our daily live trading, we are there Monday through Friday, right at market open, every day, Monday through Friday, 6:30 a.m. Pacific Standard Time. I'm there, and I would love to see you there as well. You can always join on in StockMate in the second link below in the description. If I earned your thumbs up, hit the like button. Do consider subscribing, guys. I hope you have a good one. Happy New Year, and I'll see you in the next one. Take care.